Welcome to the Polto Show. Another show. What I always say, what does it take to get your attention? And every week I'm going to be doing different shows to get your attention. We got a really good show today because of the economy. But next week's show, let me give you a preview of what's coming up. Next week's show is going to be the laws on credit. Are you breaking the laws, or is the law on your side? So next week's show. The following week, you have to pass the word around. We have so many people out there on drugs, prescription drugs. Did the doctors make you an addict? Well, you don't want to miss the couple weeks show as well. But we have a really good show because of our economy and what's going on. And I have a great guest today that's going to educate you more so. I've been in business for 30 years, but my guest today has also been in business for almost 30 years, and he's a senior mortgage consultant, and he's going to answer the tough questions. But before I bring him on, as usual, people has asked me, through my business with credit, what makes a good mortgage broker, a good mortgage consultant? Well, first of all, and my client is many of my clients asked me these questions, but I have a lot of emails that you emailed when you seen the kind of show I was doing. But my guest today, I have to give a thumbs up. But first of all, they have to be good listeners. They just can't say, all right, I heard it, go to the next topic. That's one. They have to be good listeners. Number two, a good sign before any opinion, the consultant, the broker, wants to know about your financial status and plans. So he's going to listen to you. That's why he needs to be a good listener. The bad ones pretend to know what the mortgage type you need or answer any other issues that may be bothering you without having to learn anything about it. The person who keeps you in the dark is the one most likely to scare your interest for his payday. So you don't want them either, because they're all making commissions. We know it, and they deserve it. So a good broker tries to find the best price for you. Good brokers and consultants are the masters of detail. And good ones keep their clients informed at all times. Failure to do so is one of the most things that many negative are against the brokers that I hear. They let the borrower know what's going on. Good brokers obtain all documents from the lenders prior to closing. Good brokers are experienced. Good brokers can communicate with borrowers. Good brokers are straight with their clients. And all this, you don't have to be intimidated by these people because they're out, they're supposed to be out for your well-being. And the reason why I'm saying that is not just banks, brokers, many people come into your life. Attorneys, an example, doctors. We value their opinion. Some are good, some are bad, as we know. Attorneys, they have, some of them have an ego problem. Some of them will say, I'm the attorney, you're not. Some of the banks will say, I'm the banker, you are not. And I know what's good for you. So we have many questions, and more so, the people out there want to get educated. If you want to get educated with your mortgage, I'm going to say, first of all, the questions that I'm going to be asking my guest, and these are the ones that were actually sent by you. A lot of them, I get so many questions that you wanted me to ask him, and I try to keep it to the point, and I'm going to ask him and by the emails, but not till we bring him on. We're going to introduce him, and then I'm going to ask him all the questions. But first, I want to bring my guest on, which is John Lynch. You describe who you are and what you do.
I'm John Lynch. I'm a senior mortgage consultant at Acre Mortgage, and I've been in the business 30 years. What I do is take clients, look at their overall financial position, their situation, and speak with them and see what their goals are. After we get to that, we figure out a way to reach those goals.
All right. Now I'm going to ask you, Megan, I'm going to separate these things one by one because it'll be easier for you at the same time. What is the difference? These are the many questions. What is the difference between a pre-approved and a pre-qualified loan?
A pre-approved and a pre-qualified are basically the same. Loans are not the big thing on a pre-approval. It's where a loan officer has gone through, run the credit, taken a look at as many documents that are important on deciding whether the person is qualified, and come back with a pre-qualification. But that's contingent upon getting these other documents.
Like a pre-approved credit card. You're not really approved
Correct.
until they pull up your credit report. You've been in this business a long time. You see the market. Why are these banks going under? Why is the mortgage company, so many mortgage companies went under? What is happening out there? And why are all these homes in foreclosure? What's going on?
Okay. The reason why the mortgage companies are going under is, of course, home sales are way down. Right now, the Congress had passed back in 2008 the SAFE Act, where loan officers have to pass certain certifications, get their banking exam, their national banking, and then each state. They go through an FBI and state police check, get fingerprinted.
Didn't they do this before?
No, they didn't.
So this is why they got away with murder.
Right now it's more regulated, yes, because of this act. The people, right, a lot of the people who were in the business cannot get into it now.
So actually, these are the people. No, I'm sure. Come on. I used to say, radio, we can't curse. TV, sometimes you can't curse. But this show, I could say anything I want. And I'm appalled by the fact that these assholes hurt the people, where the people lost their homes in getting the mortgage that they didn't need or didn't want. So when you say, well, these people can't practice, come on, John. They're going under a different alias name. They're working under different mortgage companies as under them. I mean, do you agree or not agree? Because I know a couple of them that are working for other mortgage companies.
They were trying to, and the states have come down on those mortgage companies, and they have gone after them. And they've levied some hefty fines on the mortgage companies that have had those people working for them, who weren't licensed, who were not able to do mortgages, who had not passed those exams. The state is very serious about that. And
so everybody had to lose their home because of it?
The SAFE Act right now, the new laws that came into effect that Congress passed, there's a premise when you pass this, you're signing an oath that you are looking out now for the homeowner. What is best for the homeowner? Looking out for the tangible best interest for them. You cannot give them a loan that they're going to, in 2 years, the rate's going to go up and they're going to lose the home. You can't put them in a balloon dependent on future income. There are so many more laws and guidelines that have been put in to protect the homeowner. The SAFE Act, that was one of the best things the SAFE Act did. We are out there now to look out for the homeowner.
Because now the biggest complaint is the mortgage companies got strict because of a couple people. Is that what you're saying?
I would say, yeah. That's a good way to put it. They got strict. Well, we, as lenders, got strict because the investors, Fannie Mae, we all know what happened with them, Freddie Mac, FHA, they got stricter too. You need much better credit, more income has to be stable.
We're going to go into that. But the problem right now I'm starting with is, why did we have this chaos in this country with mortgage companies, and some of them went out of business, and some of them are really hurting the people. One company, our government, I will mention it because it's already out in the media, that the government sued Bank of America because of what they did, and they're still coming under fire. But it's people. It's not just the word bank. It's the people that are working under these companies it's all the foul play. It's the president passed the modifications. Now look, all the attorneys that went haywire with these modifications was charging people $10,000, $20,000, as high as $30,000, and people were giving it up to save their homes. Isn't this a crime?
Right now, it is a crime with loan modifications. You have to be an attorney in this state where you're doing a loan modification, you have to be licensed there to do a loan modification, and they want attorneys who basically practice it's called debt adjustment. If you're a bankruptcy attorney or a real estate attorney, they really don't want them doing modifications. Their specialty is bankruptcy or real estate. You really, if you're going to go to an attorney, you want one who has experience with loan modifications in the state. Not from, you're going to get a lot of people, if anybody's in trouble, if you're getting the phone calls or emails from California or Florida, no, they're not located up here, okay? We're having a lot of problems right now with companies from Florida, California, and they're saying, well, we have a guy up there. No. You want to have an attorney who's local in this area who can work on your loan.
So don't trust the attorney that says, well, for $10,000 I can get you this modification.
The attorneys have fees, and each one has their own. My opinion on $10,000, it's excessive.
That's excessive, but I was told that a lot of people were charged a lot more with it.
More than that, that's extremely high.
What is the right lending that a person should use? In other words, what is the difference? You said it partially, but what is the difference between FHA, Fannie Mae, which is the Federal National Mortgage, VA, conventional, and statewide mortgage programs? Let's start with FHA, because a person, I know from credit, I don't understand nothing about the mortgage business, and I know from the people, my clients with credit, they would say, I don't understand anything of it. And yet the mortgage people, they assume that people understands. Like, let's start. What is FHA?
It's a Federal Housing Administration.
And why would somebody go to FHA? And who's the people that should go to FHA?
FHA historically has been more lenient on the FICO scores, credit, job stability, assets, down payment. It's usually easier to get people in the properties if you go FHA.
Now, what is FHA, though? I mean, what is it? Why wouldn't everybody want to go that way?
Because if you go conventional, you wouldn't have the mortgage insurance that you'd have with FHA. FHA has...
So why wouldn't a person go to FHA and not conventional, then? I mean, is it the mortgage broker that's directing them there? Because the person wouldn't if they didn't understand it.
Well, that's what our job is. Our job is to interview the person, figure out which one of these programs would be best suited for their needs and which ones they qualify for.
Now, why? Okay, the average person, would they qualify for the FHA or the conventional? If by talking to a person, to one of your clients, how would you determine which is best for them, the FHA or the conventional?
There are so many different things that go into it. Down payment.
All right, down payment. Let's start there.
Okay.
Down payment. Let's start with the person that doesn't have a down payment.
If there isn't a down payment, FHA, they want 3.5% down. They allow a gift. In New Jersey, there's a program where you can actually have the lender give you money, which would help you
But
out.
okay, FHA, you need a down payment.
Right.
Okay.
VA, you don't. Also.
Okay. Now, the difference between that and the conventional is you don't need a down payment with conventional?
Conventionally, you need a down payment.
So you just said FHA, you need a down payment as
Right.
well. So you need a down payment.
Right. Well, with the state program, there's an FHA state program. It's a blend.
Right.
Okay. That down payment can come back to you. It's from the lender. It's a lender assist.
Yeah, but I want a home, and I'm going to ask you, John, what should I get? Should I go to the FHA or should I go conventional? What would you say to me?
What is your income?
All right, I make $100,000 a year. Oh. And I want this home FHA. But what is the difference between FHA and conventional?
How much do you have in the bank right now?
Okay, well, now then my next question is, what would that determine for the FHA and conventional? How much you have in a bank? Who cares? Which one cares and which one doesn't care?
It would determine which way. Okay, if you come back and said I had $6,000 in the bank, I would probably take you FHA. If you came back and said I'm making $100,000, but I don't have any money, I would go into the program. The interest rate's higher, but the lender picks up the down payment. Okay.
Okay, so
so far.
FHA is actually the best way to go because that's if you have money to put something down, is what you're saying.
FHA is the most lenient
Okay.
if you have money.
Now, the Fannie Mae. What is a Fannie Mae?
Federal National Mortgage Association.
Now, who takes that?
It's a government sponsored enterprise. It's insured by the government with same as Freddie Mac. Those are loans that if they are conventional loans. If people take a conventional loan and you have 20% down, you don't have to pay any mortgage insurance. Your equity in your property right then is their security. So when these are sold, and people have heard on Wall Street, when these are sold as mortgage-backed securities, you have enough equity in that property where it doesn't need insurance.
Okay, the veterans now. The veterans. The veterans all say, well, if you're going to go for a mortgage, if you're a vet, what is the advantage of being a vet, if any? Because you hear them all saying, I'm going to go for the VA mortgage. What's the difference and what's the advantage?
The VA is more lenient on the ratios. Now, they have different underwriting criteria. You have to do a residual income that's based upon your monthly bills that you don't have to do with other mortgages. But with the VA, you can also go 100% financing. And this is what I like about the VA is you can have the seller pick up closing, not only closing costs and prepaids, but you can have them pick up some of your debt, pay it off to help you qualify. If you have a car, you need to get pay off to qualify, they can pay it off. If you have credit cards, they can pay it off.
Now, how about a statewide mortgage? What is a statewide mortgage program? Have you ever heard of it?
You have the Philadelphia Housing, you have New Jersey. These are programs in Philadelphia, or Pennsylvania, PFHA. You have a rehabilitation loan where you can buy the home that needs work. Let's say the sale price is $100,000, and you can't move in. They'll give you another $50,000, $150,000, put it into the mortgage, finance it, and you can have the house the way you want it. It's almost brand new. They also have different programs for first-time buyers. I like this program because they allow more alternative credit. If you have someone who has no credit, that's one of the hard things today. People need, whether it's conventional or FHA, they really want to see credit scores, FICOs.
Okay, I'm going to be talking about that though. But all these, why are all these homes in foreclosure now? Is it because of the economy? They're not working? Is it because of the mortgage companies going under? What do you feel? Why all these homes across the country are in foreclosure?
It's a mixture of the recession where people lost their jobs. People were counting on overtime, or you had two people working in the household, or they got, and this is one of the reasons loan officers really were getting a bad rap. People were put into these loans, and many people probably heard this. Go with this loan now. It's only 2%, 3%, and 2 years refinance to a fixed rate. Well, that adjustable rate shot up. It might have shot up to 8, 9, 10. People have had 14% interest rates. When they got those new interest rates, they just couldn't afford it. The rates just went right through the ceiling. And you had people that had a mortgage payment was $1,500. It went up to $4,000.
Now, these people, why couldn't somebody knock on their door to say, refinance? Why did they have to go in foreclosure with all of them? Isn't somebody knocking on their door? Obviously not. But why isn't the government, why isn't, I know the president was coming up with this modification bid, but even that went overboard because he didn't understand credit. But why, I don't understand why the president or the government said to these mortgage companies, hey, go back to the same people. Give them something that you can keep them all so we don't go haywire with this country. Why isn't something like that even thought of?
They've thought about it. The situation is if you have a loan modification, you have that loan that's a lien on the property, and it's dated 2006. And if you do a modification, you're fixing that loan in the parameters of that 2006 mortgage. If you do a refinance, you're basing it on today's credit criteria. And today's credit criteria is much tighter. Higher FICO scores, credit, and now people can't qualify. Now, the lenders were asked this, and they're saying we don't want to take loans that have negative equity or bad credit scores. So basically, it's a conundrum.
So the people's at the hands of all these bankers out there. Not to scare the people, and I'm sure you've heard from me many times. Now we're going to get into my field. And I'm appalled sometimes at the fact because, not to scare anybody, but you've heard me say many times about in-files. Mortgage companies pull up what is called an in-file, people. An in-file is a third-party computer. They pull up all three bureaus. The problem is it's not the true credit report coming from the credit bureaus. Also, in-files are outdated. So make sure you pull up each credit report from each credit bureau separately. And then show them to your mortgage guy or mortgage person. Even though they pulled up an in-file, the law states they have to accept what you're showing them and then correct it. And as far as your credit score goes, it's continuously updated from all your creditors. My beef, and John knows it, with the mortgage company, and he's going to explain it now after I say it, my beef with the mortgage company is I don't deal with that many mortgage companies. And this is the reason, as a consumer advocate, as a credit expert, many mortgage companies will make you pay these bill collectors just to get a mortgage. And I used to tell mortgage companies, you know what, you're going to be the underdog, you're going to go out of business soon, because once these people realize that after they got their home, their new home, it's all this bad stuff is still on their credit report, and then they're going to be complaining because you, the mortgage company, made these people pay all these charge-offs just to get the mortgage. And let me add, some of these bad credit on your credit report was on, quote, an in-file, and outdated. One time I had a guest on my show. It was an employee from the credit bureau. I asked them, how long does it take when something is removed or deleted from a credit report? How long does it take for this in-file company to get the message? They said sometimes 30, sometimes 60 days, and sometimes never. It's up to the mortgage broker to actually fix it with the in-file. So my beef with the mortgage company when I did seminars for them was to say, hey, you know what? Don't tell your people to pay these these charge-offs. These all could be deleted, removed, where their interest rate goes down, their credit score goes up higher. Why does mortgage companies not let the people know that this is, why doesn't the average mortgage company let the people know that this is the route they can take for a commission quicker? I mean, what's the reason? I'm even baffled with that.
That's one of the responsibilities of the loan officer, or my responsibility, is to take a look at that. And if the borrower has any questions, I paid this or this isn't mine, like bring the paperwork. Okay, I take a look at it, match it up, and then you try to fix the problem. You work on that. You're supposed to. That's your responsibility. If you're a loan officer and you're not doing it.
They don't do it. John, they don't do it. I mean, for 30 years, they don't do it. To make it simplified, all they want the people to do is pay them all. So they're into the closing that quick. And actually, the people, once they're home, so they're going to do anything the mortgage broker, by law, they think they're going to, by law, they're going to pay $10,000, $15,000, all these charge-offs, when it all could have been deleted.
It could have been deleted, and if you actually pay them off, a lot of times, I hope people know this, that you're going to lower your credit score. If you have older accounts on there, if you have a recent paid collection or a charge-off, the way the FICO system is set up, it will probably have a negative impact on your credit. So you have to have someone go over that professionally with you. There are many instances where that does happen. And you're right about that. Absolutely.
Well, that's just why I take on clients, because I try to correct the credit before they get to, let's say, you or your company. Because this way, by the time you see the report, they're all cleaned up. But if you would say, well, I have this in file, and let's say the Visa charge, they have 10,000. No, it's deleted. It's deleted. Here's the copy. Here's the copy from the True Credit Bureau. Well, then it's your job to go to your in-file company to say, hey, here's the True Credit Report. It's deleted. It's off. This is why many people are confused with the 3 credit bureaus, the in-files. They're outdated. I sat down with Congress with this, and I said, why are they even doing? Here's how I explained it to Congress about the in-files. I said, you have a shoe store, and there's 3 shoe stores on the street. They're all in competition with one another. So why would they want to put the same ad in the paper as we are the shoe stores? Because they're all in competition with one another. So why would you put them all on the same page? But the same with credit bureaus. There are 3 major credit bureaus, and they're all different. They're competition with one another. Why in the world would any mortgage company, I mean, I'm getting through to some of them, but why would any mortgage company put them all on the same page and say, oh, I'm pulling up a merged file? Big deal, a merged file. You're still putting them all on one page, and it's called in-files, and they could be outdated, as the one employee from the credit bureau said. If something is deleted on a Monday, it's not going to show up on an in-file.
We are required. Lenders are required.
But they don't do it.
Well, they're required to run a tri-merged, or if you can only get 2 bureaus, you take the lowest of the 2 scores, okay? And then you do your review. You take a look at it. You look at the paperwork. It's deleted. Make sure they have it deleted, and you go right down there.
Okay.
When you have these other things...
You're the exception to the rule, John, when it comes to this, because you understand about the in-files. Did you know, even though people study the mortgage business, did you know when I did a mortgage seminar, 100 mortgage brokers didn't understand. They thought the in-file was the credit bureau. I mean, it's pretty sad. And this is the education they're getting. They actually believe that the in-file or the merge was one bureau put in together on a piece of paper.
Wow, they should have known.
They should have known. Yeah, they should have. This is 30 years later. This is 30 years later. Fees in an acquiring a mortgage. Naturally, there's an application, appraisal, documentary, home inspection, termite inspection, settlement. When we come back, I'm going to go to break. When we come back, I'm going to ask you the emails that were sent to me from emails, okay? When we come back. We'll be right back.
Consumers, are you being harassed by debt collectors? Whether you owe the debt or not, if you're receiving phone calls or letters from collection agencies or law firms acting as debt collectors, you, the consumer, have rights. I'm consumer protection attorney Kerry Flitter. You have heard me as a guest on Polto's show. There are federal and state laws that protect consumers from the tactics used in the collection of debt. Whether your debt is owed or not, whether you've made payment arrangements or not, you have rights. If you're receiving letters or calls from debt collectors, feel free to contact our office toll-free at 888-668-1225. We'll review the communication you've received from the collector or discuss any telephone calls. If your rights have been violated, we can bring legal action against the debt collector at no cost to you. Our telephone number is 888-668-1225 or visit our website, www.consumerslaw.com. That's consumerslaw with an S.com. This is Kerry Flitter, advocate for your consumer rights. The collectors have lawyers. You should have one too. Our number again, toll-free, Pennsylvania or New Jersey, 888-668-1225.
Welcome back to the Polto Show. You will be hearing and seeing Kerry Flitter here as a guest. He's the attorney that sues the bill collectors. What an interesting. I had a meeting with him last week. Very interesting what's going on with the bill collectors, what they're doing, the robot calls. If you're getting robot calls, please don't delete it. Hang up, but document it. Don't forget next week's show, laws on credit. Are you breaking the laws, credit laws, or is it the law on your side and they're breaking the laws. You don't want to miss that show next week. We're doing a great show today because many people lost their homes. Many people that have contacted me are living with relatives. Many people, because of the mortgage companies, because of lack of work, because of they didn't understand modifications, they didn't understand refinances. And all these problems are happening in this country, and our government is just sitting back, allowing it all to happen, and it's not the people's fault. A majority of it is not the people's fault. Majority of it is the mortgage companies that went under even. That's not our fault. We didn't do anything. We didn't do anything for these people that they hired, and yet the whole world's paying the price. And then they say, well, we're in a jam right now. My guest today is John Lynch, and he's the one person that I use. And the reason for that is I always make exceptions to the rule. And I'm against mortgage people that pull up in files, which he's familiar with. I'm against mortgage companies that give people the runaround. And the reason why I chose John, because I've heard from many, many people, my clients especially, he does, everything I said at the beginning of the show, he does take the time. And I'm impressed because I don't even take the time. I yell at my clients, and sometimes I yell at him, and I'm on a Bowenbrook, and I yell at him, and he's learning too from me, my ways. And my ways are when a client calls you, call them back and get what this is what I'm saying to you. Anybody that needs a mortgage or whatever, we will talk about all this at the end. But the questions that I received on email, one from a consumer from Valley Forge. How long would it take my mortgage loan application to go through if I went through you?
That's a tough,
I know it's a broad question.
Yes, but that depends on how fast I get documents. If I had the documents, I'm talking pay stubs. Are you self-employed?
Now, we're going to go into that, though, but how long have you had everything?
If you have everything, and you're talking about going to closing, with everything, I like to comfortably say, with everything, appraisal, title work,
right,
pay stubs,
right,
bank statements, and we don't need anything else, 3 weeks, 2 weeks, 3 weeks.
Okay, now I'm glad you said that, because another complaint that I had from a consumer when you said everything that you need. Why is it that everybody until the end, till closing, and then when they get to closing, oh, we forgot to ask you for one more thing. Why is it always one more thing? Because the people get aggravated. It's always one more thing. After you give them a whole list, let's say you give them 10 things to get. They gave you the 10 things. And then they say, well, we need one more. Where are you getting the one more from? And are they, is it them that they're not giving you everything because they're making a checklist themselves? So why do mortgage people at the end go to closing and saying, oh, we forgot this?
What usually happens is that we weren't told about something. At least that's
by the consumer or by the mortgage?
By
the title
by
company?
The consumer. There might be, for example, on a pay stub, there might be a loan being taken out. We'll go over the income, and I get the pay stub. I'll have a list, 1 month's pay stubs. All of a sudden, I see every fourth week, I see $500 and something coming out. And what is this? Well, it's being, and the response is, well, it's being taken out of my pay, so it doesn't count. Yes, it does count. It's a debt, and you're paying it monthly. So we have to redo the ratios, and then we have to see what the balance is. So we have to check it out with probably work.
All right, but that's a good question, because what you just said, something was missing at the end. But isn't it the mortgage broker's position and job to say, here's what I need, don't leave anything out, or it's going to come back to haunt you?
A lot of times people will, if we're sitting down, we have everything. Yeah, I'll be looking right there for that. Okay? If I don't have everything then, and it gets mailed in or sent in, that's where something usually pops up.
Does somebody has to, now you just said something else, do they have to meet with you in person, or they can do this by the phone? Can they do it by Federal Express? And when you're telling them, here's what I need, can they do this by mail?
We can meet, in person. We can do this by mail. We can do this on the internet. We can do a mixture. I could do an interview on the phone, send you a package by the internet.
How many states do you cover?
We cover 14 states, acre.
Okay.
I'm in 2 states, Pennsylvania,
Okay.
New Jersey.
Okay. The other question was, okay, now this is a good one too because you almost said it halfway. What documents do I have to provide a mortgage company? This is my biggest fear. They always tell me 5 and then at the end it's 10. What documents do I have to provide that are in solid gold?
You need 1 month's pay stubs. You need 2 years tax returns with W-2s. All the schedules on the tax return. Only the federal. We don't want the state return. Any 1099s or W-2s.
For how many years?
2 years.
For 2 years. Okay.
Okay.
Now they gave you all the tax returns. Now what else besides tax returns do you need? I am your client. I just gave you all my tax returns. Business, personal. What else do you need from me?
We need to know pay stubs, bank statements, where the assets are coming from. If this is your first home and you have the money in the bank, we want 3 months bank statements to see the money that it was seasoned. If it's a gift, we need the donor's ability to give you the money. So
But I don't want that. I don't.
Okay.
It's no gift. What I'm saying to you is, I've just provided you all my tax returns, and what else do I have to give you? This is not a gift. I had money in the bank.
it's a refinance.
Either one. What do they need to give you?
If it's a refinance and the house has enough equity, we really don't need the asset. It's not as important.
Okay.
If you are purchasing a property, we want to trail the assets. We want to see seasoned assets, down payment.
If you're purchasing a new property,
Correct.
is what you're saying. Now, suppose somebody wants to get a vacation home. Same thing.
Same thing.
So it's more in the assets and more in the money in the bank.
Yes.
Now, a lot of my clients, I'm cleared to credit, and I always say to them, I could be wrong, but you tell me. I always say to them, you better start saving because you need a down payment and you need closing cost. Am I correct?
Yes. Yes. If you're buying and if you're saving up for a second home too or an investment property, a lot of times people don't take into account that they need to have reserves. When you purchase a property, you only need 2 months at the most reserves on the property. Actually, 1 month you get away with. When you have an investment property, second home, we want to see 6 months reserves. So we want to see that in the bank after closing.
What is your, now you have it to say so right now, what is your biggest, and I want all clients to hear this because this is important to you as it is to him. What is your biggest complaint about a client? When you talk to them, when you're trying to help them, what is your biggest complaint? I know what the other biggest complaint, no, don't laugh because I know their complaints. Now, what is your biggest complaint about when you're on the phone with somebody, they're meeting with you, what's your biggest complaint? And be honest so this doesn't happen with future clients.
Surprises. My biggest right now, especially nowadays, what happened with the economy. The accountants right now are under a lot of pressure, and you'll notice right now if you're self-employed or anything like that, the accountants have gotten a lot tougher. Okay, I need the see that tax return, and I want to see it early. Sometimes people who are self-employed will keep putting it off, and then when I get it, we're 3 or 4 weeks in, people think that the house is sold, and I'm like, these numbers, you're writing off too much. That's my biggest complaint, not getting the tax returns on self-employed early.
Okay, not getting the tax returns on the self-employed, that's your biggest complaint. What about the complaint with the consumer, the average complaint with consumers that do they give you all the information? Do they not give you the information? What is your biggest complaint that tell the people that you don't want to expect when you talk to them?
I want these documents now. I want them immediately, not when you get a chance, not after the weekend. Basically,
Good for you. I'm good. That's what I said. I want to hear it.
I don't want to hear, well, I mean, I really don't. I'm a nice guy, and I'm glad you had fun this weekend. But now it's Monday, Tuesday. I still don't have them. I want the paperwork immediately.
Do you follow up with these people?
Yes, and my processor will too, and she's mean.
She's as mean as me. Because I'm pretty mean, as you see, and as you know.
I will be calling you and emailing you where the documents are, especially with critical documents.
All right, now we're going to say something now that you didn't expect. But what is your biggest complaint with me when I bitch to you? No, what is my biggest complaint that you are going to change with all the people out there and they're listening? And if you have to think...
no, I'm not.
What is my biggest complaint to you?
My biggest complaint would be...
No.
I think sometimes you take the...
Go ahead. What is the biggest complaint of the consumer? Better yet, what is the biggest complaint of the consumer?
That's okay. Is that that I'm not getting back?
Yes.
Okay.
Yes. Now that's the only thing I feel you have to correct is getting back to the people that are listening. That says, well, he doesn't get back to me. You know now, because that's why I asked you. What's your biggest complaint with the people for them to correct? Now, you said, I want the documents, correct? Right. You have the right to say, I want the documents. Their biggest complaint is, which you always say, I'll get right back to you, and you don't. Why don't you get back to people? What are you looking for?
My mistake with that was I would be waiting for a document or a situation or something to come. I'm waiting for something. And possibly the way I phrased it was, I get back to you today. No, I'm waiting for it to come in the mail. Okay. That probably is that could be.
I wanted to clear that up. I wanted to put you in the hot seat because I wanted to clear that up with the people that are listening for future clients. That the reason why, so they don't call my office to say I didn't hear from him. I haven't heard from him, and he said he was going to get back to me. So that's your normal expression.
Oh, I'm not going. It will not be a normal. It's not my normal expression anymore. we changed that.
We changed that from the Pearl Polto show with it. But you do understand.
I will say that I will tell you what I'm waiting for. If I'm waiting for an appraisal, I'm waiting for the appraisal, and when I get it, I'll get back to you.
Now, that's another question. Who pays for the appraisal? Does it the mortgage company or does it the consumer?
Who pays for the consumer pays.
Okay, the consumer pays for the appraisal. Now, what happens is when the appraisal comes in at a lower price, more than the house is worth. What happens then?
See, this is getting to be... I would sit down, and this will... We have a few heart-to-hearts when we talk. One, I want to talk to you a little later about people who are in trouble. And there's a couple of heart-to-hearts I have, and this is one of them. The credit, when we talk about that, you know...
Well, the credit part I do. I do the credit. So I'm not worried about the credit, but what happens if the house is less value?
In FHA loans, if the value comes in low, the borrower has an out. The deal's dead unless... the seller and borrower can negotiate a new deal. Now, that could be where that you would have to put more money down to make up the difference, or the seller.
They don't have the money.
Then the deal's dead.
The deal is dead. So then these people, second person, then their house could be in foreclosure eventually because the reason why they wanted to refinance is to lower their mortgage. But if the appraisal did not come in, then they're in bad shape because what you're saying is who's making all the rules is the mortgage people.
We've got to take an during this heart-to-heart, I'm going to ask you, and I'm going to ask you about sales. Not what somebody's got listed, not what somebody told you their house is worth. What has sold similar to yours? I'm going to go online and see what I can see. I'm not a licensed appraiser, so I'm not implying that. But I'll try to educate you on what's happening in your neighborhood where the value is going to be coming in, be determined. At that point, we'll have a game plan. You want to move forward. If you do, then we go ahead. If it doesn't work, the value comes in low and the deal still works, then we'll decide what to do. For example, if you were going to go conventional, if this is a purchase or if this is a refinance and your rate's high, you may end up going from a conventional with no mortgage insurance to a conventional with mortgage insurance or an FHA with mortgage insurance, because the drop in the rate and the payment is still a benefit to you. We have to do the calculations. Okay, we try to have a plan B anywhere we think there's going to be a problem, and if we think it's the appraisal, and nowadays it is, we try to come up with an idea of a plan B.
John, is the mortgage business worse for the people today than it was years ago, or better? I mean, you're saying the government's putting all these rules and safeguards, but is it better or worse than 20 years ago or 10 years ago? Would you say, for what I'm seeing out there with all these foreclosures?
I think it's different.
It's different.
It's a lot different.
But is it better or worse?
I think it's getting better. I think it's got a lot of problems. I think some of the underwriting is too tough. I think when you have the first time buyer, you got young couples who are renting, you've got young families or move up families, that I think sometimes the underwriting's too tough where they can't move up or they can't get that first home. And that would also help the market. That would help foreclosures. People wouldn't be foreclosed, and it would stimulate the market. That's what I see. The problem is, where I see it being better is there aren't more or less the vagabonds going after people like predators.
The mortgage people are not in the selling of homes. So where do these homes go, these foreclosures? Do they go to the investors that have the money and have the credit? But mortgage companies are not in the business of selling homes, and they're losing all these homes. So what happens there? I mean, who's at profit? Is it all the new people with the money, the investors that are taking advantage of these foreclosures?
Actually, that's a good question, because that's also changed. They have right now, it's not the way it used to be. People would go on the court steps, see their house be on for a foreclosure, and there'd be a bunch of people bidding on the homes. The banks right now, when they foreclose, are taking the property back. Then they're putting it with a realtor. At that point, they're going to be looking for a buyer based upon different ideas on what they think the value is. Okay? What's coming up now, though, is the banks are finding out that there are not as many buyers because it's tougher to underwrite these loans. Something new is starting up. It's where groups of investors are getting together and they're buying blocks of foreclosed homes and actually mortgage notes. That's happening some in Nevada, somewhat in New York, and that could be a trend that's happening. What will continue with that, if these people buy the blocks of homes, they may be willing to rent back to the occupants of the home. It could be the people who were in foreclosure, and it'll be at a discount, and the terms may be 2 years, but it will be their home.
It's interesting with the people. The other thing is, what is a good faith estimate?
A good faith estimate is, and it's a good faith estimate, okay? It's not written in stone, but it is a good faith estimate, okay? It's where we come up with what we think the cost you're going to incur as a borrower. It goes from the appraisal. We estimate, a value, let's say 400. Credit reports, document prep, title work, surveys, termite, home inspections.
But what is it? What is the estimate that the person has to pay the mortgage company?
No, it's going to be all the third parties at the closing table that are going to get paid. They're going to come to the table either with a check if they're buying a house, or they're going to just go to the table and there'll be a check from the lender if they're refinancing, and then the title clerk will sit at the end of the table, and all those numbers you see, those lines are checks being given to different people.
It's amazing. That's called the good faith estimate. The other question that was asked is, can I lock in an interest rate after you are on the phone with them, and then the interest rate will change, like let's say 3 weeks later, and you're still getting all the paperwork. Can their interest rate be locked in that you're giving them?
The interest rate can be locked in when you are taking an application. It can be locked in up until 4 p.m. That day. And then you would be subject next day, if you're floating the rate, to what the rate changes the next day. The rates change every day, sometimes a few times a day. Now, if you decide to float, if your rates go down, like lately everybody who floated got better rates. Other people, if you lock in, you can lock in for 30 days or up to 60 days. Okay, and then we go over the terms there.
Okay. Now, what is the minimum down payment? I get a lot of clients that I've cleared and are finished.
Mm-hmm.
And their question to me is, what is the minimum down payment and other cost that they would have to pay? So let's say somebody has no money. Even though they have good credit, what you're saying is they need some kind of money as a down payment.
That goes into willingness and ability to pay. If they have a good credit, it looks like they have a willingness to pay their debts. Now we're looking at ability to pay. We're looking at how are they handling their finances. They're not saving the money required to purchase, and if this is that important to them, that's looked at in underwriting. There are ways to do 100% financing and have closing costs picked up by the seller. You can actually get in.
Okay.
No money.
So the seller can actually be paying the closing costs with it. For all the people there that aren't in trouble, and the seniors out there especially, they want to know this, and maybe you can explain it in pure English, as I always put it. What is a reversed mortgage? You own your home free and clear. And suppose if you don't own your home free and clear, can somebody get a reverse mortgage?
Yes. And
how does that work?
The reverse mortgage, you could even be late on your mortgage payments. You could be behind. You could be in foreclosure, actually. You would have it redeemed. What happens is if you have equity in your property, and if you have a note on it, let's say your house is worth $200,000 and you have a mortgage of $60,000 left. What happens is the $60,000 mortgage is paid off, and you're going to live in your house for free for the next.
But who pays the bill? You have to pay still the bills, correct?
You still have to pay. Well, you can also set this up where you get money that would pay the tax and insurance. Okay, but that may shorten the term. You may have a time limit on that. It might be 10 or 15 years.
Now, suppose it's going above 15 years. Suppose a person lives to 100. Can they stay in that house scot-free? I mean, is that the stipulation? You can stay. Reverse mortgage means you can stay there till the day you die?
What will happen in the reverse, what they are looking at is the actuaries, when were looking at that, they came back and they said, if you're staying in the house 15 years, 20 years, okay, the house is going to appreciate in value. So if you originally have that $200,000, okay, and let's say 15, 20 years later, well, now you're at $200,000 debt you owe. Well, the house has gained value, probably in the range of $100,000. So you bought yourself more time.
How about a will? You gave the house to your children in wills. And you got a reverse mortgage. What happens when the parents die? Who gets the house? Does the bank get the house, or what's that process? Do they sell the house, take out their money that they took, and give it to the kids? How does that work?
It would be set up by an attorney, and I'm not an attorney, but what I usually see with that is, that's a good example. Let's use that 200,000 again. Let's say 60,000 that was paid off. You're living in the home for free, and let's say something happens 5 years later, and there was $20,000 used to keep your parents in the house. So now there's a net equity of 120,000. That would be distributed amongst the heirs.
Okay, so when those people, the parents died, the reverse mortgage would still, it's not that the bank just keeps everything.
Oh, the house remains in the name, is in the family's name, in the homeowner's name.
Okay, so it's still in the homeowner's name,
Right.
even though it's a reverse mortgage.
Mm-hmm.
So the heirs will still get it.
Right.
The banks just take out what you were in that house for all those years.
If you, yeah.
Is it wise? What's
if
your
they-
personal opinion about a reverse mortgage?
People, they have seniors live in houses now where they do actually own the home, but they don't have equity. It's called a life estate. And what happens is when they pass on, the equity is already set up to transfer to somebody. Okay, that's a life estate. The reverse mortgage, I think, is fantastic for seniors.
Now, how about if they still owe their mortgage, and let's say there's no equity in the home, those seniors can't get the reverse mortgage?
They can't get it. No,
Because there's no equity in the home.
there's no equity.
So how much equity do you have to have in a home? For, let's say, the baby boomers that are out there, how much equity do you have to have in a home to start the reverse mortgage if they wanted to?
We'd have to really look at each situation. It depends on how much equity they do have, if they have a balance on the mortgage, how much is in there.
Mm-hmm. So more concern is the equity that they have in the property with
Well,
it.
also how large their mortgage is.
And how large their mortgage is, and what's the equity in the house, and so all that has to, because now the baby boomers, they all have credit problems, and not even the baby boomers, the parents have credit problems. People in their 70s and 80s are having credit problems. And speaking of that, let me just add something. If you owe, and bill collectors are attacking you, one of the senior citizens, believe it or not, they went into her account illegally and froze her account. Pennsylvania is an exempt state. This is sad what's going on in this country. I'm going to be doing a show on this separately. But, if you have a credit, I'm going to say out there, people, if you have a credit problem and you're out for a new home, get your credit straightened out first. Don't go to any mortgage company, especially even John, who will treat you with kid gloves. But get the credit corrected first, and that's through me. And once I see it's corrected, then I can turn it over to John, or you can turn it over to any mortgage company. But I would say John, because John understands the credit business. Now you can be saving as I'm doing your credit. You can be doing a lot of things. You don't have to pay the bill collectors that mortgage companies tell you to pay to get that first mortgage or even refunds, whatever. So you can have your cake and eat it too. And the reason why I'm doing a show like this, because many people are under the assumption that, oh, well, I have credit problems, but that was years ago. Wrong. It could be 5 years ago. It's still on your credit report, and the mortgage company will make you pay it. And it's better be deleted, so before it gets to the mortgage company or to John or whatever company you choose, it's to the point where it's not there. So your interest rate would be lower. And I always tell my clients, worldwide, I tell my clients, as I'm doing your credit, if you're after a new home, start saving, putting money in the bank, so this way you have your cake and eat it too. My biggest beef with the people out there, which is you, is when I turn you over to my mortgage people, and he asks you, here's what he needs, A, B, C, D. Don't procrastinate, because I do homework too. And I do homework, not just with you with updates, following up, but I also do it because he's my associate. And he's not my associate. I make choices. And through 30 years, I went through 10, 15, maybe 20 mortgage companies. And the reason why I went through 10, 20 mortgage companies is because they weren't consumer friendly. That's one. They expected everybody to know what they knew, and which is not much. Because I'm a credit expert, but I don't expect people to understand credit. I'm an insurance agent. I don't expect people to understand all insurance terms. So I'm a paralegal. That doesn't say everybody out there is a paralegal, that you have to know what I know. So when I wrote my books even, I always say I'm writing this in pure English. So John understands where my clients are coming from, at least, because he knows what to expect. But he also knows, and my clients do, and if you're listening out there, you're saying, boy, is she right. My clients I'm very strict with. But I have to be strict with my associates too, because they reflect on me. And if I get back to you, they better get back to you. And it better be everyone that I'm associated with, because they have to with you, the consumer, and you're going through a pretty tough time right now. And I'm trying to make it. He's trying to make it. Even my clients, John, I have to praise him because I do watch. And I do hear from my clients and to say, you know what? He took the time. And I listen. I listen to my clients, whether believe it or not, I listen to every word you say, even though I yell and scream. But I listen to every word, and some of my clients will say, he's so understanding. He's so consumer oriented. And I like this. The only thing I didn't like about it, and if you knew me, I scream and yell at everybody that isn't doing the right thing with the consumers. And the only thing, he had a bad habit of saying, I'll get right back to you, and never got back to you. Well, don't do that to the people. Because I have a reputation. When I say as fast as you are, I'm faster, I mean it. I have that reputation. He's going to get that reputation because he's a consumer-friendly, oriented mortgage person that not only does your mortgage, but he tries to educate you. And I'm impressed because not only he tries to educate you, he takes that extra length, and I'm not even sure, you go a little bit overboard to correct a problem that they're having. And that's what I do with my clients. But I notice people telling me, you take that extra step to correct the problem and then make them happy to get what they want. And that's pretty good in the business. And I never said that to you because I'm always screaming and yelling at you, as you know. But I've known you for so long. I have known John for so long. But I've known a lot of people for so long, And the thing is, we're trying to make it right to put this system back where it is. I told John I want to make this my toll-free. Anybody that needs a mortgage or refinance. I'm going to give you my toll-free number, the 1-800-876-CREDIT, because I think I want to know everything that's going on to get it done quicker. That's one. And number two, as I said, even on my Facebook, I said I was going to give you a little bonus. Well, here's my bonus to you. Because I deal with people with the mortgage, anyone that has a credit problem, before you go to your mortgage company, don't do it. Now that you got all the facts here. But to become my client now with the credit, I'm only going to charge you $600. You heard me. I'm stating it already, not the $1,000 that I charge, $600 because of John, because I know what you're trying to get. So what we'll do is we'll make it a little party here. We will correct your credit. I will give it to John. John will take the next step, getting you that mortgage. And either way, we're going to be working with you. So you're going to have consumer-friendly John, and you're going to have the mean me, because as I said, I yell. When I ask for documents, I better get them. Because I always say, it's your priority. It's going to be mine. If it's not your priority, it's not mine. And people that are watching this will say, boy, is she for real? Because she's always yelling and screaming. And yet some people will say, you know what? I like you. I like you because you're upfront. You say it like it is. And I'd rather have you working on my side. And that's what I do. So it's not that I'm against you personally. I want to get you that dream home. I'm tired of this economy. I'm tired of watching this world going kaput because it's not your fault. It's the mortgage broker's fault. It's the people that took advantage of the mortgage system. And you know what? And you're the underdog. But you have to be brave enough to say, I want that home now. I want to get refinanced. I don't want to lose the home. You can have a modification, a reverse mortgage, a new home. But let's do it the right way. Get a copy. If you know you have a credit problem, don't assume you know if you have a credit problem or not. We will correct the credit where you're not going to pay bill collectors. We will correct the credit for you to get that home of your choice, the refinance. If you're a senior citizen, now you heard the qualifications, what to get for a reverse mortgage. You have everything right there on YouTube, everything on pearlpolto.net. You're going to know, and you have the advantage of me, 600. I'm going to stick to that to every client out there. I don't care if it's 100 or 500. Anybody that sees this YouTube, all you have to do is 1-800-876-CREDIT to say, Pearl, send me out your credit package. There's a mortgage paper in there, and it's going to be a fill-out paper. Do I want a new home? Do I want to refinance? And that goes into your file. And when that credit is done, then I contact John and I say, they're ready. Now it's step 2. It's your choice. So we're going to try to make this economy a lot quicker, better for you. And we're going to work with you. John, I want to thank you.
Thank you.
Did you learn anything from this?
I learned a lot from this. I enjoyed this.
Well, it's interesting because you're helping people, and a lot of things you didn't know. I put you in the hot seat today, and I also thanked you because a lot of people did say and gave me that compliment with you. You take the extra mile.
Thank you, everybody who did that. I appreciate that.
And you know what? And anybody out there that needs it, watch the show because eventually we're going to have, as I said, we're going to be giving away eventually T-shirts, the Pearl Polto T-shirts, to everybody that puts a like on Facebook with this. So, and I will let you know more about that next week. But next week, laws and credit. Are you breaking the laws, or is the law on your side and they're taking advantage of you? The following week is your doctor making you an addict because of all the pills he's given you. You don't want to miss these coming shows. And then the bill collectors and the bill collectors' attorneys. This is Pearl Polto, as always, making the most of your credit. Giving credit where credit's due. This time, get your refinance and do it the right way. See you next week.